Hey, good morning, everybody. Regarding today, today is Thursday, May 18. The setup, is deltas are flat. Basically, the deltas are flat. As I said, the structure that they left yesterday suggests you is a flat open. But future so far is giving us 10 points as a gap up. The preview, as I posted yesterday, I give you guys, if I'm not wrong, 4,100 in resistance. I don't give the maximum upside as I thought. Anyway, before I was looking for 4,167, 4,167 basically. But look how the difference. Look yesterday at the close. Okay, I put a support at 4,130, so resistance 4,160, and of course the first support is 4,050. That what delta is also suggests. This was the gamma exposure from yesterday. But look how is now. It's totally different. The gamma exposure is 797.6 million. We don't have too much gamma exposure for 4,160. They jump, for 4,185. So 4,185 is supposed to be the major resistance, and we start to see a negative gamma at 4,145. This is 0.02 DTE, okay? This is 0.2 DTE. So regarding yesterday, if you open with a 10 points, gap up, 4,160 will be the main support, okay? Because you have positive gammas. Or we can consider also La La Land, because before it was a positive delta. So if you open at 4,160, because they suggest 4,168 since we closed 58, right? So 4,160 is supposed to be La La Land. If we lose in 4,160, so we could be back test 4,156. Okay, if they want to really dump the market and being based in this structure, now we need to look for support at 4,145, not more at 4,130. Why? Because we start to see negative gamma in 4,145. So if you open with a 10 points gap up, and if they want to dump to clean it up at least 4,185, we could go back at least for 4,150, 4,145. It's kind of very different than I told you guys yesterday. But let's keep 4,131 in our radar. Why? Because the COTMP region is 4,138. So is a little bit above this range. So if they want to sink, this could be the maximum downside. Okay, could be the maximum downside. And also again, we could see the flip-flop gamma during the intraday to clean the 4,185, to clean this 4,185 gamma exposure and make market open to break things, to go for example to 4,200. Yes, the flow is bullish. It's totally changed from one day to another. I get myself upset and I apologize myself because I saw the 4,152 printing because somebody bought 4,150 was a huge how can I say, a huge order. So the person was looking for a 8% spike in deltas. I told you guys at 11 a.m. But after couple minutes, since I saw retail selling, but my interpretation was dealers. I told you, hey guys, I think 4,152 is supposed to be out of the table because 4,130 calls is start to be unwind, but was retail close those calls, not dealers. Dealers bought from them. And we saw the 80% spike at 4,140 call contracts, right? Since we went up to 4,164. Okay? Guys, we have a huge GX, right? And we have a liquidity. Huge GX, usually, we see the market is really directional and also needs a lot of money to move the market. Example, Dave, took a picture from the gamma exposure, the gamma structure for today. So to move the market 1% today, we need $23.61 billion. That's a lot of money. Okay, that's a lot of money. So to go to 4,200 today, we need this to be changed. Okay, and this to be changed, we need a flip-flop in gamma exposures. In gamma structure, basically, to flip to negative, to flip back to positive. Otherwise, we will not go to 4,200 today. That's my humble opinion. Why? Mathematics. A lot of money is needed. A lot of money is needed. And I don't know if, dealers want to take the risk to buy a lot to bring markets up to 4,200 today. Okay? So I'm looking again for more flip-flop. So during the intraday, this structure supposed to be changed because the flip-flop, and then you'll be ready to go to 4,200. I'm not saying that go to 4,200 today. Now, so far, we start to need to look for 4,185, right? Because you have gamma exposure here. And you guys know, positive gamma, sell rallies, buy bottom, buy weakness, buy support. Okay? Máximo downtrend, I'm still looking for 4,137, 4,131, 4,137. Okay? But now, since we have gamma exposure, negative gamma exposure at 4,140, 4,145, we need to start to look this as a support. Okay? We could lose the region according to the new structure, back test 4,137, trap the bears and switch back to a positive gamma, and consequently, unmount 4,085 gamma exposure, and market could be ready to go higher and break things higher. Okay? I just wanted to give you how could you be the zigzag. Doesn't make any sense because the structure that will go straight for 4,200 today. We need to see some weakness during the intraday. That's the market movement. Also, if you look 60 minutes, okay, market suggests that we are almost overbought. So if you go back to 50, test, some EMAs, as I said, if you test 4,137, we could see this back to, oversold, and a spike could be happening again. Also, I told you guys about Tesla. I'm looking for Tesla to see a spike at 180, guys. I'm seeing a possibility at a 5% rally up to tomorrow. But also, is also overbought, tends to see a realization, tends to go down, then get the strength to go up. Okay? Why am I looking for 180? Let me put in the weekly graph. Okay, let me put in the weekly graph. We will see, that Tesla have a potential to backtest the EMA 200 in the weekly graph. As you see in the indicator, MACD is giving like a buy sign. So we have the upside to go, to backtest, the EMA 200. And could be happening, this week. If everybody's looking for a crash, that's, as Steve and Chris is saying, it's much better. and much be painful, to go up at least this week. And next week you start to see weakness. Okay, because you clean the book. Let me show something very interesting, and also highlighted something that I told you guys 2 days ago about the 3,900 put contract that somebody bought, $1 million. Of course somebody bought, but dealer could be the sellers. Look, how much money they put in put contracts. Of course, this was a block. Somebody sold, somebody bought. Of course, behind the seller have a buyer. Okay, but for those people that sold those puts, they look for those big premiums. And and of course, the people that bought those puts also look for a big premium, look for a crash. And consequently, this could be suppress the crash. That's the idea. Because it's too big. Highlight over here $60 million, over here $36 million, over here almost $100 million. So the sellers is looking to get the premium. 4,300, 4,300, I'm not seeing nowadays. Also because these are always identified as a short straddle. They short 4,300 call, and also they short 3,850. They looking to this person is looking to receive $30 million. Okay, so you see how big are the orders. How big are the orders. Consequently, it's totally normal for St. Croissant, and everybody looks for a weakness in the OPEX. It's a huge amount of money. Okay, it's a huge amount of money. Behind a buyer has a seller. So we never know who will win. You see, much orders over here, 30 million, 70 million, 21 million. It's huge, 28 million. Also, some that's already in the money. These guys already make a lot of money. They bought 3,900 call, and the strike price, the break even is 4,050. Because of that, you guys have been seeing, and also have been highlighted that 4,050, 4,038 is the turning point. Also because those big orders. Okay, another one, 3,900 strike, so break even 4,038. These guys already make a lot of money. Okay, so those guys consequently visualize it, a squeeze, because our other put buyers. And consequently, you have been seeing a strength in the market. Look, this one is a 4,100 and 4,100 strike, break even 4,176. So today, the design is changed. We could go to 4,185. This order, supposed to be heavy premium. And also, if you see the zigzag that, I suggest, I speculated, see a downtrend, remove, the gamma exposure at 4,085, clean this, we'll be ready to go to break things and at least backtest 4,200. Okay? And then this guy, you make a lot of money also, at least $200 per contract. Okay? You make a lot of money too. But and the 3,900, that was 1 million. Oh, these ones huge. Look, this one. They bought, 5. I don't know. Behind there, a buyer has a seller. So now 4,137. That's the key region, especially for this order. That's good to highlight it. Also, that I put you guys over here. I didn't check this order before. The bottom could be something like this. Okay? And also the COTMP, as I put in the sent in the GX, the gamma exposure to you guys, is 4,138. Let's refresh. It's 4,138.77. It's very close from this level that I suggest to you guys, because the old design, because this design that I'm highlighting with my mouse over here. So if somebody sold this, no, and the break-even 4,137, he look for market to close above 4,137. Otherwise, this person will not be exercised. This is a cash. This is not asset. So a lot of people have had like confusion. That said, but they strike 5K, but the break even is not 5K. The break even is 4,137. If they sold to 129 millions, they look, to mark close above 4,137 because the person that bought, you not exercise that. Okay, this is supposed to be valuing right now much less. Let's check. Five K is 835.8. Let's see what 862. He's making $30 per contract so far. Okay, so this person at least is looking for market to for the person that sold. No, he looked for market to close above 4,137. Of course, the person that bought is looking for market to close below 4,137. So 4,137 is key level. That's a huge key level for the close of this week. Remember, the hanging man is 4,138 as resistance. If you close as suggest today, tomorrow, the hanging man is already gone. So because we break the resistance, the pattern, the candle pattern. Okay, hope you guys also look for 4,137. That matches with CCO MTP, and that matches with the region that I told you guys. Okay, so this will be the key level for today and tomorrow. You guys, if you keep looking, you have a bunch of big orders. Another 5K strike, exercise price 4,144. 4,144, if you look for the 0 to DTE, is start to be a negative gamma. So the person that sold that contract, how much it was, 21 millions, the person that sold is also look for a market to close above 4,144. Okay, of course, the person that bought is looking to market to close below 4,144. So the key point, we have big put orders in the book. Okay, so market tended to walk in a different direction, to be painful, and consequently the buyers vislumbrated this possibility, this squeeze. Okay, we also see a lot of short calls, 4,375, 4,300. As I show you guys the straddle, the short straddle. Also, here's a bear straddle, the short straddle. So anyway, we need to look for at least 4,137 as a support for this week. Okay, because this $129 million order that I just show you guys. That one's the $1 million at 3,900, they break even 3,899, the big volume that I highlighted to 2 days ago. Since we fall hard, on Tuesday, we need to keep this in radar. Okay, we need to keep this in the radar because that I highlighted yesterday. But the structure changed yesterday. This was a huge excuse. Could you keep it up to tomorrow? We need to evaluate tomorrow. But you already saw a bunch of big orders. As you can see, the book starting next week, we have a bunch of puts as well, but it's not more bigger. Of course, this is totally out of the money. The strikes is totally out of the money. Okay, we could see a trigger. Yes, we could see a trigger. because the order is not too big. We could see a gamma squeeze for the downside. Yes, you could. We need to check the structure that they provide day by day. Then, so far, the structure looks bullish. So far, we have liquidity to go to upside. So far, we have gamma exposure to go to upside. Okay, but starting next week, the book is full of puts. It's full of puts. Okay, we have couple calls that now suggests that the pain trade could be the downside. Why? Because the biggest orders now is the call side. For example, 4,205, 35 millions, break even 4,261. Because that I highlighted that it's much better to see a melt up and a blow off the top start on Monday, because those big orders, if they bought and if you go to 4,200, this is supposed to be much higher. We can check how much money, if the guy sold, how much money he made. The trading price was 52.06, and this printed on February 28th. Consequently, we saw delta decay. This is supposed to be value in low in the 56. So expiration, when the expiration 31, end of the month, strike for 4205, 31. Let's check. Strike 4205. This is costing 2110. 2110. Let's see how much he's making right now. If the person sold, the person already is making 62.38%, right? Yeah, that's correct. I put in the wrong line, but yeah, that's correct. This person is already making 62.38%, right? If they sold. That's the profit so far. So this suggests that the person sold. Consequently, now since we have big orders in the call side, it's much more reasonable that you see a structure, since you have big, put orders expiring this week. It's much more reasonable we see a squeeze up to Friday, and we start to see downtrend start on Monday. We already find one order here. Let me highlight to you guys. Because we saw $35 million. Of course that we still have big orders, but also suggest to me a short puts, because it's really far from the current strike. I mean, really far from the current screen price. So for me, those also was a short puts. Okay, only if markets crash. Only if markets crash, this you make me profitable. So consequently, I'm looking for a downtrend, not a crash to backtest 1,700, 2,000 points. Because this suggests me also nowadays as a short put, right? And this also suggests me as a short call. That's the big number. And the person that you sell, you not allow the market to go to backtest 4,126. So consequently, I hope you guys understand my mind. The idea is to squeeze people because the big put orders that you have a lot of is in the money. So squeeze people up to Friday. Good news coming up to Friday, and the downtrend starts on Monday because big call orders is in the book, and of course the big put orders was out of the money. I don't expect any crash at least in May. Could you be happy, in June? I'm looking more for June. Okay, you guys understand? Because, all the puts is out of the money. Okay, it's totally out of the money. You guys understand, my read? You guys understand my read? So, squeeze up to tomorrow is totally reasonable. Test 2K is totally reasonable up to tomorrow. Of course, that tomorrow we have power speaking that could shake the market. We also have the debt, limit, going on. Could you shake the market? But doing those big orders and something the obvious never you go get through is much better, to try to interpret in a business in a bullish way, especially because they squeeze yesterday and start to look for 4,137 as a key support, and a downtrend starts on Monday doing the big orders, especially the $35 million order that you have been seeing. That for the person that is sold is already making 62%. Okay? That's my interpretation, especially because I'm looking for the book. Okay? So today, máximo downtrend, 4,137, 4,138, start at 4,131, up to 4,138. That's the CO TMP, and also we have the 129 put premium, 129 millions. That the break even is 4,137. So I'm looking for 4,037 as a support, and then clean up the gamma exposure at 4,185. Change the intraday GX, lowering the amount of money that is needed to move the market, and consequently give a free road to squeeze people. Flip-flop gamma, as I have been telling you guys during those 2 days, yesterday and on Tuesday as well. Guys, I'm finished by here. Take care, enjoy your day, and let's see if I don't mess it up regarding my read that I had yesterday, but I step back, do it a wrong interpretation to the book. Take care, guys.